So BlackRock just launched their third crypto ETF ever, the staked Ethereum ETF. You can now earn staking yield directly through a traditional ETF for any institutions. Ripple is also buying back $750 million in their own shares at a $50 billion valuation. And apparently, Goldman Sachs is the largest institutional holder of the XRP spot ETF. Very interesting. But here's the thing. That might matter more to a lot of you watching, which is 38% of all altcoins are close to their all-time lows right now. This is even lower than the crash after the FTX collapse in 2022. So CoinDesk says that that's bullish, but give or take, we are probably going to see a couple more months of chop, even if the 2022 pattern repeats. However, in terms of extreme price action, we are pretty close. Historically, altcoins have not seen such a widespread drawdown and just uninteresting across all the different sectors. And we also have some very big updates on the Clarity Act, and I found some pretty interesting research on what the Clarity Act actually brings and the timeline we can expect for the Clarity Act to pass this year. And actually the clock is ticking with the midterm election year. So we will get into that in order to see the exact signal we can follow with the Clarity Act, whether it can be passed or not. Okay, let's get right into it. So first of all, BlackRock has just debuted their staked Ethereum ETF. This is a big surprise, actually, coming at a time when nobody wants to touch Ethereum. Even myself included, the biggest Ethereum bull since 3 cycles ago. I'm pretty scared to be buying ETH right now. I mainly only want to buy Bitcoin. But BlackRock launched a staked version of Ethereum. And you might think this is not a big deal, but this is not just another spot crypto ETF. It's coming from BlackRock. And BlackRock has always led the way. Why? Because BlackRock is the single largest institution in the world for asset under management. And BlackRock was the deciding factor that pushed the spot Bitcoin ETF and the spot Ethereum ETF through the finish line. They were the kingmaker. So now, this is only their third ever digital asset ETF. They don't have anything else. Pretty interesting. This is just launched today, and we shall see how much demand there is for a product like this. The other, so BlackRock is also sweetening the deal as we speak, where the first 2.5 billion assets that come into this will have a 50% fee cut. So the other institutional news that I saw is around XRP. 2 things that really stand out. Number one, we know that Ripple plans to go IPO sometime in a good market. And they have just kept raising more and more money and actually buying back their own shares. So for people who have invested in Ripple through OTC deals over the past 5 years, a lot of these people were actually able to cash out at a pretty good valuation. And it's interesting because this comes right at the time when people found out that the spot XRP ETF is mainly held by many individual firms, and the only one that stands out as very big is Goldman Sachs. So I'm not sure how to make of this. I think potentially it's part of a deal where Goldman Sachs will be the underwriter for their IPO. I don't know. But yeah, something interesting. So now Goldman Sachs is the largest institutional holder of XRP. Although this is interesting because so far, no real institutional holding of XRP has been disclosed because only institutions and only entities with over $100 million in assets are required to fully disclose. I saw that categorization somewhere. But anyways, so we really have not had much institutional buying demand in XRP, mainly for usage and for partnership with Ripple, the company itself. So this is kind of one of the first major holdings revealed. I just found that to be interesting. Okay, so Ethereum, XRP, these are probably some of the most institutional bets in crypto that will last. It's just a matter of when are they a good value. So let's dive into that topic. 38% of altcoins are right now near all-time lows, which is worse than the FTX crash, according to CryptoQuant. Now, here is the exact chart and quote. And you can see right now, 38.8% of the number of altcoins is now at all-time low. And when you compare this over the last 4 years, this is officially lower than the FTX crash in November 2022 back here. And it's also lower than all of these ones. For example, this one here in April of last year was the unwind of the Japan carry trade. So long story short, we have more than ever the number of altcoins out there, but also more than ever, the number of them are at all-time lows. And that makes sense if you look at the sentiment across the board right now. So some of the most popular posts right now is there will be no alt season in 2026. And if you're talking about altcoins, you're an idiot. However, I do think you have to consider what the opportunity at hand really is and what is an alt season. So I'm not sure exactly when it will happen, but at some point in the future, altcoins will at least make a rally. And there are a couple conditions to come with that I have talked about before. Number one is, well, Bitcoin needs to be in an uptrend in a bull market. And number two is global liquidity needs to improve. And these are the two triggers right here that I have outlined. So we need QE and we need Bitcoin bull market. You should go watch this video if you're interested in that. So when you consider these types of analysis, people see the headline and they just assume, hey, that means market is bearish and we shouldn't look at any alts. Well, the reason why this is kind of counterintuitive is because you want to buy alts when they're cheap. And technically speaking, we don't have alt season, like officially confirmed and officially consensus that agrees it is an alt season until much later in the cycle, until alts have outperformed Bitcoin meaningfully by multiple months. And if you think of it like that, now is some of the best time to be accumulating alts. The only caveat here is in an accumulation period, you don't know how much longer it's going to be. Okay, when you look at percentage of alts that are at all-time lows, and you look at, for example, total 2 market cap, these are some of the lowest it's been compared to historical levels. Here is the 100-day moving average and 100-week moving average and 200-week moving average. And you see the 200-week simple moving average is even a better indicator. Even in 2022, the total crypto market cap, excluding Bitcoin, did not go much below the 200-week SMA. So alts are even more oversold than Bitcoin. That we can agree on. But we don't know when altcoins can come back. And you have to be ready to wait for a choppy period. So then the action you could take is very different. And that's why I wanted to specifically mention things like Ethereum and things like XRP. Because when you look at these altcoin towards all-time low charts, it gives you a false sense of hope that your shitcoins will come back to all-time high. But that's not the case. Most altcoins do not make it to a second cycle. Even compared to 2022, even though down here after the FTX crash, a lot of alts were at all-time lows, and then by 2024 they were much higher. They were back in profit. But this is the percentage of altcoins, not all altcoins. Most altcoins did not survive. The only ones that really survived are either the top of the top blue chips or the altcoins that really caught on to trending narratives. So that's the main caveat. Because we're in the bear, we don't know what the next big trends will be. I mean, I think we can assume AI will be big, but there are also a million different AI coins now. So I think if you are considering altcoins, you really have to start from the very, very top and just think about, hey, would I buy Ethereum? Would I buy XRP? At what price? And am I willing to hold them for a while? So you have to start there. Okay, so that's a big caveat I want to give you guys. Even though it seems like there's an accumulation period, most of the newer alts will not make it out of this period. And when you look at some of the top altcoins, you have a much higher probability for these to actually come out on top as long as you have enough patience. Okay, and a little bit more on the sentiment side of the current altcoin market. Here is the Altseason sentiment indicator as presented by the sentiment platform. So here they use the search term buy Dogecoin as a retail indicator, retail social interest indicator. And that's at all-time low. That's way lower than ever. So basically, you can look at these actual charts, or you can just look at maybe YouTube search, or when anyone makes a YouTube video. If you make a YouTube video outside of our little bubble that is still bullish on crypto, you utter the words buy Dogecoin to anyone else, they will laugh at you. They will think you're a scammer. Not even for just Dogecoins. You tell them to buy Ethereum, they will say you're a scammer. So that's the stage we are at now. And I think it gives me hope, and it gives me good reassurance that I want to at least keep updated on altcoins. And when the two triggers for altcoins hit, number one is Bitcoin starting a new uptrend. Number two is full on the Federal Reserve doing QE. As long as these two things hit, even if everyone else is still saying altcoins are a scam, I'm going to hit the buy button very aggressively. It just hasn't happened yet, but it will happen. At some point, it will happen. I am not going to let these types of, random ridicule, swing my actions to not watch altcoins anymore. Okay, and let's look at the regulation front as well. So there's a big settlement that came out today between the SEC and CFTC. So the SEC is the regulator that oversees securities trading, while the CFTC oversees commodities trading in the US. So these two agencies have been fighting nonstop over the past 10 years about which cryptos are securities and which are commodities, and thus which agency should be overseeing them. Well, today they have come out and made a joint announcement clarifying that they will basically stop fighting, and they have come together and written a memorandum of understanding, an MOU, to say that they will have a joint harmonization initiative to advance coordinated oversight and promote regulatory clarity. So there isn't much specifically divided yet between the two agencies, but here are the main areas they want to target to agree on. So product definition through joint interpretations and rulemakings, modernizing clearing, margin, and collateral. So mainly lending, borrowing, and I believe perpetual trading. And reducing friction for exchanges to register. To provide a fit-for-purpose regulatory framework for crypto assets and other emerging technologies. This is specifically referring to the Clarity Act. So they are putting the Clarity Act front and center. Streamlining regulatory reporting, and then risk monitoring surveillance. So the main thing to note here is the Clarity Act. The Clarity Act is the most important crypto regulation for altcoins, not for Bitcoin, because Bitcoin really is totally fine to be traded, to be used. But for altcoins, whether that's existing altcoins or new altcoins, the Clarity Act is going to make the whole crypto space in the US go from basically 10% acceptance to at least 50%. And here is what the Clarity Act really is. So there's a little bit of a deep dive I want to give you guys. So what the Clarity Act actually is. The Digital Asset Market Clarity Act of 2025 was introduced in January of last year, and it passed the House on July 17th last year. So it's already been 6 months since 9 months since it passed. But it only passed the House. However, the Senate kept delaying it. Basically, the Clarity Act just aims to decide which agency between the SEC and the CFTC should control which type of crypto activity in the US. Here, the division is designed to remove the regulatory ambiguity that has left crypto companies uncertain for years. Now, it's not only just them dividing the tasks, but also it will give a clear pipeline for all types of crypto activity. For example, if you want to do an ICO, who do you register with? If you want to do an exchange, who do you register with? How do you make sure you are able to do your business in the US? Everything in between. And for example, for exchanges, you have probably heard of these crypto companies who have enough money that have been filing for something called a OCC charter. So the OCC charter is kind of a workaround that companies like Circle, Ripple, and Coinbase have filed. And World Liberty, for example, they also filed the OCC charter. Even though they are the Trump-backed, family business, they still had to do it. Why? Because, well, this is the only way for them to really have some reassurance to say they are able to operate legitimately in the US, because an OCC charter is essentially a banking license. Here, the OCC charter is a federal license granted by the Office of the Controller of the Currency to operate a national bank or federal savings association. Now, this is increasingly being used by fintech and crypto firms, but these are not banks. The reason why so many companies need to go through all this and file for a banking license is because there is no other license. If you want to be a crypto exchange in the US, you kind of need this because there is no crypto exchange license. So that's what the Clarity Act will do. If the Clarity Act does not pass at all, then the OCC charter becomes the primary vehicle for federal legitimacy. And it's not even just for exchanges here. Circle is not really an exchange. Ripple is not really an exchange. Coinbase is. So Circle is a stablecoin issuer, but why do they need a banking license? That's because even to operate a stablecoin in the US, you need to have a banking license, which is kind of silly. So why is that? Well, there is a big discussion point that's holding this bill back, and that's the stablecoin yield. So for stablecoin issuers to provide yield, just regular yield, to their stablecoin holders, like the few percentage points from treasuries or whatever DeFi yield, it could be higher. You cannot even provide any of these yield right now to your customers unless this bill passes. So the banks have opposed this from the start. So the banks do not want stablecoin issuers to give yield to their customers. So effectively, if I hold USDC, I cannot get interest on it. I cannot get treasury interest on it, even though for each $1 in stablecoin, there is $1 in treasuries. I'm not entitled to that. The banks from the US don't want me to have that. They want it for themselves. Now, the White House has proposed a compromise for the stablecoin companies to limit this to peer-to-peer payment activity while prohibiting yield on idle balances. The crypto firms accepted it, but the banks still do not want it. So this is the main pushback right now. Basically, if you deal with stablecoins at all and you want to have any sort of yield, you have to go through the Clarity Act, or you have to become a national bank charter, which is some of the hardest things to do. So this is the big thing that is still holding this bill back. Once this is passed, basically both sides will agree, and then we'll have all the different things that come with it, like ICO rules, decentralized exchange rules, trading of securities and non-securities together in the same exchange. You can have like super apps. So the whole Project Crypto timeline. But this part around stablecoin yield is what's holding it back right now. Finally, will this even be passed this year? Because it cannot be dragged on forever. So the specific timeline is that we need it to be passed this year before the midterm election cycle begins to really dominate the schedule, and then the senators cannot do anything. So remember, this bill, it already passed the House of Representatives, the Congress, but it has not passed the Senate. That's important because this year is the midterm election, and during the midterm election year, the Senate in the US gets reelected. Many of the seats get changed. So when the midterm election campaign fully starts, most of these senators will play very defensive. They don't want to support a random crypto bill. So the campaign period for the midterms is right around August to November. So once we get into that period, it will be very hard for other senators to make a big change on this bill. They will mostly ignore it or keep their current stance. That's why the clock is ticking. So here is the summary I read, which is pretty accurate. So because of the midterm elections this year will change up the Senate, we need to have this bill being passed before August, ideally, but at least before September. If it still is stuck after September, it probably will not be passed. Couple reasons. So here are a few windows. So from March till May, the Senate calendar already has several recess periods in late March and May. So this is when they will be on break. And this bill has 2 more hearings that's required. So the DC analysts say that realistically, for 2 markups, the next 8 to 10 weeks could be enough time for them to get this passed. Okay, so this is the first timeline. If it doesn't get passed before the end of May, then after Memorial Day, there is a tight period. So look at this. From June 29th till July 10th, the Senate is out, on vacation, whatever. So in between this period, from May 29th until June 29th, and then July 29th until August 10th, there are 2 periods, and they can have essentially 2 sessions. And then finally, the last realistic session, pre-election, is from September 10th until October 5th. This is even much more unlikely. I see some other analysts saying that September to October is already too close to the pre-election date, to the midterm elections, and they're not going to discuss this bill. So that's why we really need to watch this very closely. If it doesn't get passed by August 10th, and then August 10th comes, the Senate goes on vacation, then probably we're not going to see it get passed this year before the midterm elections. And that's very bad, because next year, after the midterm elections are finished, in January 2027, a new set of Congress seats will come in. And usually what happens is the bill will be reset. So they will start from scratch. They will discuss the bill again, draft it up, and from what I've read, it will have to go through the House again, the whole process. It will take another year plus, which is very bad for alts. So that's why the Clarity Act, you're going to start to hear about it more and more from now until the latest is August 10th. Within this period, if it gets passed, it will be very nice. It will be a big win for alts, and we could see some relief in alts. But if it doesn't get passed after August 10th, probably we're not going to see it for a pretty long time. And that will be a big loss for the industry. Okay, so that's the Clarity Act. I will save some more of the research for a later video going into exactly what the Clarity Act plans to cover over the next couple months whenever this gets brought up. And that's basically it. So in short, in summary, 38% of alts are near all-time lows. Historically, this is a really good time to be accumulating alts. Although you want to start from the very, very top, start from Ethereum, because most of the small alts, they will not make it past the bear market. However, there are some brighter things to consider for the altcoin space, specifically the Clarity Act. So the Clarity Act from now until August could be a big boost for altcoins that will introduce a lot of different ways to issue alts and to trade alts in the US and have it be fully regulated, fully legitimate. The 2 triggers I am currently watching, according to our previous research, is number 1, Bitcoin needs to go in a new uptrend, which is shown by it crossing back over the 50-week SMA. That's the number 1 signal. And number 2 is the Fed needs to print money and increase their balance sheet at a much larger pace. Once these 2 conditions are met, I do believe altcoins will come back quite meaningfully, starting from the very top, starting from Ethereum, and then XRP, BNB, etc. But that will take time. And the specific timeline of that, it will just match up with everything. So because we know that the Bitcoin bear market can last as long as another 8 months until late November, that's the time period. After this period, the first trigger condition should be met. Bitcoin should be in a new uptrend. The second trigger condition is the Fed's pivot. Well, we need the new Fed chair to come in. That's in May. And then usually the Fed chair will not make a huge pivot until he has his full speech in August after Jackson Hole, after the Fed meeting with central bankers. So long story short, I believe the Fed timeline is will have to wait until August. So that's the rough timeline. After August, if Bitcoin has already started a new uptrend, and if the Fed is actually printing a lot, we will be past this current uncertainty period as well with this Iran crisis situation, and maybe we will even have the Clarity Act by then. So all the things are lining up to Q3 the earliest, but probably Q4 until alts can resolve all of their uncertainty and make a comeback. Now, again, not talking about like market-wide alt season, just talking about some of the biggest alts for them to at least mean revert. I think that will happen. It's just a matter of when. And I think that timeline is probably Q4. Thank you for watching the live stream. Subscribe to the channel so you don't watch the next live streams, so you don't miss the next live streams. Catch me on live every single weekday, right around 2 to 2:30 p.m. EST. That's the time I plan to go live from now on. And follow me on X at virtualbacon0x for day-to-day alpha, for quick trades, for clips of these live streams as summaries. And again, thank you for watching, and I will see you on the next video. Bye-bye.